from the SEBI board meeting. Yash, tell us, what are the key takeaways?
Well, that's correct, Ashmit. The board meeting today from SEBI has thrown some very important amendments when it comes to the current buyback regulations. One big statement which came from the board today is that there is an intention to completely phase out buyback through stock exchange or open market route by April of 2025, and the preferred route for buyback would be through a tender mode. As far as time till April 2025 is concerned, regulations towards open market buyback have been made more stringent, just like increasing the utilization of the amount earmarked for buyback to 75% from the current 50%. But since a tender route for buyback is going to be the more preferred one for SEBI and for companies, relaxations have been given here. SEBI has allowed upward revision of the buyback price till 1 day prior to the record date of the buyback. Also, they've removed the requirement of filing a draft letter with SEBI for a buyback of this particular sort. There are more relaxations which market regulator SEBI is still in talks with the Ministry of Corporate Affairs. These would include increasing the maximum limit of buyback to 40% of the paid up capital and free reserves versus current 25%. Also allowing net debt-free companies to have 2 buybacks in a single financial year. Importantly, there were various concerns about IPOs getting delayed after DRHP documents being filed with SEBI going to more than 100 days. Here, market regulator SEBI said that SEBI can't be the reason for delay in such IPOs, and it's many merchant bankers who've been repeat offenders of not providing the right information to market regulator SEBI. From now on, SEBI will look at returning these IPO DRHP documents and disclosing it in that manner if important information is not given to market regulator SEBI in the form that they've asked for. Apart from that, on the question, of course, NSE MD CEO mentioned about the intent to increase trading hours. Market regulator SEBI here saying that SEBI has no intervention there. If exchanges want to increase the trading hours, they can do so. There is no sort of restriction from market regulator SEBI. Certain large brokers have been, will be identified as qualified stockbrokers. They will have to comply with enhanced, regulations if they are selected as qualified stockbrokers. Finally, the conditions for onboarding FPIs have also been relaxed from market regulators' end. And also, lastly, SEBI has said that corporate governance norms which are applicable on all listed companies now will be applicable on REITs and InvITs as well, irrespective of them coming from a company which is listed or not listed.
We feel that